Welcome to the Monocle Banking Podcast, your weekly foray into the world of banking and finance and insurance, as always, curated by Monocle Solutions. I'm McChlery, and today we're talking about probably one of the hottest sections of finance at the moment, BNPL, Buy Now, Pay Later. It really has moved beyond hype. It's now a core checkout rail, pushing conversion and giving thin-file consumers a way into formal credit. So it's all about financial inclusion. The market's racing towards 130 billion rand online sales this year, and PayJustNow says it's signing up 100,000 shoppers a month. But the real story is what happens after the clicks, risk repeat behavior, and whether the data flywheel truly creates inclusion. I'm joined now by McChlery, who's the Chief Data and Analytics Officer at PayJustNow. Mark, great to have you on the podcast. And I've got to ask you how you found yourself in the data space. Was it always part of the plan?
Yeah, I think as with most things in life, you kind of transition from one area of interest to another. I'm just quite fortunate that my journey through my career led me to a point where I could start playing around with open source software. And that really set the framework for what was really our core principle at the heart of building PayJustNow. Obviously open source refers to software, but its success is because it is free at the point of distribution. And so it wasn't a large stretch to think, how do we make payments successful? And that was by making it available free at the point of distribution to the South African consumer.
And that PayJustNow story, you're still relatively new, I think launched back in August of 2019 by Craig Newborn. Were you part of the founding team?
Yeah. So Craig, myself, and Greg van der Riet were the motley crew of founder friends that got this storied sort of brand and product off the ground. And, we've really enjoyed immense growth, not only as a business, but in our role in the retail GDP, effectively the real economy, where the rubber hits the road, so to speak.
Yeah.
It's been a tremendous journey with tons of learning behind the back, and our approach of just simply wanting to make today's PayJustNow function better than it did yesterday has been sort of at the heart of our continuous evolution and innovation.
What kind of growth? When you say you've experienced phenomenal growth, and has it surprised you, given that you obviously sat down, saw a gap in the market and thought you would grow, but that rate of growth, when you look at it from the outside, I don't think anyone could have predicted just how the BNPL market would explode.
I think, if past was prologue, comparing it to where it was showing signs of significant sort of growth globally, we should have estimated it. But to be fair, at the point in time where we actually received our first round of actual funding, I think it was version 71 of our model. And if I think back to what that looked like, it was, way off the mark. We totally underestimated just how viral in nature this growth was to come. And again, it's not just because it's a great product or great people. It's actually a function and circumstance of the economy. And obviously, coming through 2019 into 2020, COVID's kind of set the playing field for us, and we marched on from there. Luckily, we were able to satisfy the trust factor. When you tell somebody that it's for you and it's free to use, as long as you pay on time, logic subscribes that if it's too good to be true, it normally is.
Yeah.
So our first real challenge was to get over that trust hurdle, and the social proof that came from the early days continued to springboard us into where we are today.
And where would you say BNPL really sits in South Africa's payment stack today? Is it a budgeting tool? Is it a credit substitute? Or is it a conversion engine for merchants? Or is it all of the above?
Yeah, I think it is all of the above. And that's actually a really interesting question. One we grapple with quite a lot when we decide on who we're trying to message, what we're trying to convey. Because we're not just processing payments. We feel like we're building a financial identity layer for the modern South African consumer. Where every transaction is a data point that says I can be trusted or I can be trusted with more. And in our minds, that's not fintech innovation, that's financial dignity at scale. And I think there's a lot to be said with just our design principle of simplicity at the front, with complexity, making sure that we don't lose our shirts under the hood. I just think that it was easy to grasp. And once you use it once and validate for yourself that it is what it says on the tin, then you start to imagine how PayJustNow could operate in your consumer sort of life in your own context. And that's the beauty of it. It's actually that hubris from our very broad sort of consumer profile makeup that has led us to expand beyond just pure BNPL into a pay in 6 and a pay in 12 option. This now obviously setting the scene for us to be of utility where she needs us, when she needs us. And obviously, with the data that we're able to curate, it informs our scorecards from a behavioral perspective, from a risk perspective. And it actually starts that journey, that relationship between PayJustNow and the consumer that uses us. And we continue to listen for those signals to see where we should be adapting to meet tomorrow's demand.
Yeah. And I mean, there's so much that you've referenced there to unpack, but the broad, I think, societal good here is that you are giving that financial dignity to consumers who ordinarily, in the traditional sense, just wouldn't be banked from a credit perspective. And you're mining that data, you're able to do that. So talk to me about how you're doing that through the data, and where do defaults actually show up? Is it in the first purchase cohorts or repeat cohorts? And you've publicly referenced, I think, sub 2% GMV loss rates on BNPL. That's remarkable.
It is. And, it's something that we're really proud of. That it validates the argument for its existence. That coupled with our continuous sort of year-on-year growth over 100%, that also reinforces that there's a gap that we're able to fulfill. The portfolio at our scale at the moment really allows us to be dynamic in that the majority of our missed installments are typically your first foray, whether that be maybe missing the mark on education or, making sure that how it works is fully understood at that point of transaction. We do see the default rates drop off precipitously after your second or third transaction. And obviously that sub 2%, there's a modicum of attempted fraud in there as well. And so we've got to have really robust sort of algorithms under the hood, making sure that we are applying friendly friction to protect the South African consumer's identity and applying hard friction to where it's clear that there's a bad actor at play. So the sum of all of those things together, I think, lends itself that there's a social contract with a PayJustNow consumer user. She understands the value that it's bringing her, and I think intent is 80% of the battle when it comes to a credit relationship. If the intent is there, and our consistent approach, to being supportive of her has really put us in a good position.
Absolutely. If the intent is there, and that's what the data tries to establish, but risk is where BNPL lives or dies. And when you look at things like silent over indebtedness, for example, I mean, how do you detect customers that are juggling multiple BNPLs across providers, given the limited bureau reporting?
So if you consider that our risk is actually technically limited to 2/3 of the transaction value, the term typically, in the mid 40 to late 40 days. So our risk at a single transaction level gives us the room we need to actually let her make that transaction and prove, that she's going to honor her side of the social contract. We have and we continue to evolve the data that we're able to access, whether, she's shared it with us or if we're able to imply it, based on sort of synthesized cohort analyses. And then, just taking that smart gamble. And again, validating that the intent is there to honor it. At the same time, giving her an opportunity to walk away from the till or place an order for something that was just out of reach if she had to pay for it in full, which is typically a sort of a durable, higher quality product or something that's needed really urgently in an unplanned sort of way. That's typically the first foray. And, that sunken cost, it's not a fallacy. There is logic to someone looking at how they have to honor their exposure to lenders. If you've already paid towards that transaction, stands to reason that you'd settle it so that you can use it again. You're always keeping the powder dry for the next time something unplanned happens, so to speak.
Yeah, that's very interesting. But if we look at kind of the direction of travel globally, and if South Africa moves towards bureau reporting and lightweight affordability, as we see in the UK and Australia, and that kind of, it seems to be where the world is heading, what changes at PayJustNow? Approval rates or time to decision or merchant conversions? How would that impact you?
look, we've got to come out and see what the final sort of requirements are that we'd have to be ready for. But our credit vetting process has been regulation ready since the beginning. We believe data transparency builds trust. And the question isn't whether BNPL should be regulated. It's how can we make that regulation effective, that it doesn't add in layers of cost, unnecessary cost, simply because that's how it's always been done. And, we're desperate to be reporting to the bureaus. They don't have an established account type under which BNPL can report. That's the complexity. So there's some work to be done within that central body. But I think that so long as the moat within BNPL sort of broadens and the real value is felt at the edge, whatever needs to be done to be compliant will be. And we believe that we're almost there with our regulatory first framework.
I want to come back, and maybe we should have started here, the mechanics and the unit economics of BNPL. So maybe you can just walk us through how the business model works, who pays for what at checkout. And there's the merchant fee model, there's interchange rails costs, there's loss rates, there's refunds and returns you've got to deal with, and how that nets out per transaction.
Yeah, so let's use a real world example. Let's say you signed up and you got a 3,000 Rand facility. What that means is we're comfortable to let you process a transaction for 3,000 Rand with the data that we have available to us. And you find what you're looking for. Let's just say for our number's sake that it is 3,000 Rand that you're checking out with. At the point of checkout, the card that you have registered to your PayJustNow profile is debited that first installment. The second and third installment are scheduled for your next 2 paydays that you've declared during that sign-up process. Now, at that transaction point, we raise a processing fee to the merchant, and we confirm to them that they can release the goods. Consumer either walks out the door or delivery is dispatched with the order, and we settle the merchant the agreed rate for that. Obviously, our costs are traversing the rails, our cost of capital, all of those associated fees. So our core revenue stream is our transaction revenue. But again, with our growth and the scale that we are enjoying and the data that we've been able to amass, that's hastened our value proposition to our retail partners as well, where we're not now solely reliant on transaction sort of revenue. We're able to give an intelligence layer, so analytics, whether it be descriptive or comparative insights, we can give that to our retail partners to help them be strategic in their planning. We saw a lot of sort of engagement from our retail partners in the lead up to this year's Black Friday season.
Yeah.
And what that does is it sort of creates the tension to say, well, you're a retailer and you have a marketing budget typically spent mostly with Meta and Google. PayJustNow with our over 3 million signed up consumer users is a perfect closed loop ecosystem in which the merchant should be spending their marketing budget.
Yeah.
And the key observation there is now you're not competing with the likes of Temu and Shein, who've got those big budgets to come in and throw up those costs.
Yeah. And globally, I mean, we see those BNPL margins compress if it's merchant fees only. So creating that additional post-checkout value in the analytics and the kind of marketing and all that is hugely important for you as a business. Are there other opportunities, maybe insurance cross-sells or anything like that?
100%. Like, again, it's I'm probably going to sound too ethereal here, but it's a branching stream of probability. We're an event-driven architecture. We have a business model, and the data and the demand informs us what is needed next, or where is there a new gap that we haven't spotted before. So I wouldn't discount any further strategic innovations because, it can be on the table so long as it makes sort of commercial sense, to whoever's going to consume it, to validate that, that somebody would be prepared, to spend money on something they need or didn't know that they needed until we made it clear. But I wanted to just suddenly struck me, we're speaking about all of these things in isolation, the consumer, the merchant, analytics, and the marketing. I think it all comes together in the economy because if you think about it, since we launched, I think somewhere around about the 20th of September last month, we processed our 11 billionth Rand in transaction value. Now, at that sub 2%, just keep that in the back of your mind, that is a significant amount of money that has gone back into the economy with no sort of excess fees or interest, squirreling some of it away.
Yeah.
So that delta in my mind empowers the merchant to be ready for growth, to have more inventory, And all of those knock-on effects are good for the economy. It'll be impossible now and impossible to actually come out with an actual number. But if you just think about it logically, that is enabling growth. And it's also giving merchant partners who don't have the budgets to defend from foreign players trying to muscle in on the market, it gives them the leg up to be constantly evolving and relevant.
Yeah.
So there's a lot to it. And all of these metrics are really closely looked at all the time. And the hero in this saga is the consumer. And if the hero is happy, then the merchants are winning. And if the merchants are winning, then the hero's continuing to be served.
Yeah. Oh, I mean, it's like sharing value at scale in a way that we haven't seen. And I think the industry, the financial services industry, was ripe for this kind of overused word disruption, but it is a huge disruption. If you look at the e-commerce dynamics, with online set to hit 10% of South African retail this year, got Black Friday around the corner. Where's BNPL penetration deepest? Is it the pure play e-com? Is it marketplaces? Is it omni retail? And how I mean, you referenced Shein and Temu and even Amazon now in the country. How does that change your funnel?
It's had a massive impact on the retail sector. You know, you only need to open up your browser and have a few mouse clicks before you start reading about how some retailers have been impacted. Sometimes obviously gets miscited as the boogeyman for woes, because it's not just, you know, those foreign players that are harming. You know, there's exogenous factors like the tariff rates and all of those good things. But I think the consumer in their very nature, I'm not surprised that e-commerce has grown to that level. And what we are seeing is that our consumers that initially transacted in store, that typically would get into public transport and go to the mall and then go shopping and then transport those goods back, the more and more comfortable they became with the process and the flow, the more convenience we offered her by saying, well, now you can order it online and it'll actually be delivered to your house, thus changing how the consumer is actually engaging with products and brands. Conversely, we see people who are really prolific online shoppers that look at a brand or products a couple of times, and lo and behold, there's an in-store transaction. So they actually were wish listing or shopping around, and when they got to feel it in their hands, they walked out the door after having made the payment.
How do you deal with returns? Because that seems to be that could kill the economics. So maybe you could just share a bit more about how that works, and what is your return rate delta BNPL versus cards, and which post-purchase interventions actually move the needle on that?
So the return rate was a really, really challenging issue, specifically for the e-commerce play. I think back to the days where Zando hit the scene and completely upended how she shopped by giving you free returns. And what that did is it changed the behavior for people to now buy 3 things and send 2 back every time. It did set the course for a layer of cost and impact to the to the climate. But returns are always a factor, but it's on the merchant side. If a transaction is processed and then it's returned, the retailer processes that return on their POS or in their e-commerce backend. And all it does is it, using API, it goes and recalculates the transaction. And if it nets at 0, it nets at 0. So it's a function of the POS. It's not really anything that we get involved with other than exposing the API to allow that refund to be processed appropriately.
Right.
The interesting thing there is, there was another innovation from a couple of years ago, is because the card rails are quite a significant, cost in our unit economics. Our refunds, although significant in rand value, still only around sort of 2.8 to 3.2% of our GMV. So it's not as bad as as the general sort of return rates. But by putting any refunded value into a PayJustNow wallet, we were also now foregoing the rails and also making that value available immediately to the consumer to use again, setting the scene for the merchant to upsell or cross-sell, or for her to go and find what she was looking for elsewhere.
And what are you modeling for Black Friday and Cyber Monday this year? I've just very unscientifically got a sense that we've become a little bit lukewarm to it. It started out with big, really discounted offers, and now everyone's offering sort of 30% and calling it Black Friday. What are you modeling for this year?
We're seeing the same, but we are seeing a a flood of higher spec technologies coming into South Africa, whether that's a function of the tariffs at play, where the OEMs are now just rerouting products to whichever market will take it. I was surprised to see how the price of TVs have come down. Like, you can pick up a 70-inch TV now for about 10,500 Rand.
Wow.
When the mind boggles.
Yeah.
So we are already seeing a lot of wish listing type shopping, where there's add to basket and then leave the checkout. But it's just to create that paper trail of what did it cost then. I think there's a lot of wish listing going on at the moment. But I do also, the whole psychology of a sale is that FOMO, where you're seeing a lot of hype and buzz and all of that. I think this year it's going to be invested in quite heavily by the retailers, although it's no longer Black Friday in my estimation. It's Black Friday month. And what that naturally does is it creeps into October already, where retailers are trying to get their hands on what would be spent before any of their competition starts making those offers. And what we saw last year, quite interestingly, is there was a marked shift in behavior where you weren't just shopping for the saving, you were actually shopping to pre-fill that cupboard for December. And then we saw in December, it was making sure that your powder was dry so that you could go back to school and back to work and all of that in that tough January stretch.
And then just lastly, Mark, I mean, when we look broadly at the financial inclusion element of all of this, PayJustNow's entry cohort skews younger, thin file. So, there's evidence that it's certainly supporting that pathway into the more formal credit space. What share of first-time credit users, and after sort of 6 to 12 months, how many of those have clean repayment streaks and higher internal scorecards as a result?
Yeah, correct. It doesn't skew to the new entrant. It is significant. And it's also a core strategy that we have had in employ from day one, where we decided that we were going to accommodate thin file within PayJustNow. We see roughly, I think it's down to about 12% now of our transacting monthly active users are sort of in that cohort, and they're not distressed or underdressed. They're simply new entrants to the market. And what we've seen from people who fit that description 4 years ago, how that evolves. They are now thriving young professionals, developing, building their lifestyle, using PayJustNow as a tool. And I think that BNPL and the innovations that we come up with beyond BNPL, Pay in 6, Pay in 12, insurance, the B2B offerings, it sits at the intersection of payment modernization, which I think credit must go to the SARB, because their initiative to include fintechs in the payment ecosystem really sets the scene for a positive influence that fintechs can bring to this core function of the economy. So it sits at the intersection of payments modernization as well as credit democratization and inclusion. And so for me, the growth of online versus physical retail isn't despite economic pressure, it's because of it. And consumers are also equally optimizing every decision. And what we've done within PayJustNow is given them something that they can use when they make that call.
Well, Mark, it's been great having you on the Monocle Banking podcast and sharing just a bit more insight into why BNPL isn't just about splitting payments. It's so much more than that. It's reshaping our access to credit. Risk and financial inclusion are often bandied about as buzzwords, but I think BNPL, yes, I know it has its critics, and I do think work will still be done on getting greater insight into how many people are fighting and that kind of thing. But I think broadly speaking, the BNPL story, and certainly PayJustNow, is balancing that growth with discipline in a remarkable way. Great having you on the podcast, and look forward to seeing how the growth evolves over the next few years. Thanks for your time.
Thanks, Michael. It's been a privilege to be on with you. Thanks a lot for the opportunity.
If you enjoyed the conversation, please follow, rate, and share the show. Send feedback or guest ideas to the team at Monocle, or reach out to me at Michael Avery on Twitter. Tell us which part of the financial ecosystem you want us to unpack next. I'm Michael Avery. Thanks for listening, and we'll catch you on the next one.